But when the invoice is given to you, you don't give the VAT to the non-resident company. You withhold it and remit it to the tax authority. That provision has now been extended to everybody issuing you an invoice that didn't include VAT. So if you are running a finance, heading the finance, or you are the head of tax, you must know that as time goes on, when the revenue authority comes to check your compliance level with VAT, it has now extended beyond the VAT you charge. When you are selling your output VAT, it's now extended to your obligation as regards self-accounting for VAT. That's very critical, and that will require some changes in forms, which I believe FRS is doing. I am aware that some steps are already being taken, issuing circulars, issuing guidelines. I'm sure in a couple of weeks, many of them will make it to the public there. But that's very critical. The second for MSMEs is that, particularly micro business, you have exemption from income tax. What you have is an exemption from paying taxes. You do not have an exemption from filing tax returns. So if you are consulting for small businesses while you are sharing the gospel of zero CIT, please remind them that the obligation to file is still there. Another subtle point which has been made, but it's worth stressing, is the fact that because of the exemption for micro businesses, it now matters the vehicle you are using to run your business. And what I mean by vehicle for running your business is, it matters whether you are registered as a limited liability company or you registered an enterprise or a business name. Because when you register an enterprise or a business name, from tax perspective, there is no difference between the legal entity and you, the owner of the business. What you pay is personal income taxes from the profit derived by that enterprise. And there isn't any exemption from tax as far as personal income tax is concerned. So if you run a business with an enterprise or with a business name, and you are jumping at the euphoria of zero CIT for small businesses, you are only rejoicing for some other category of people. It now matters whether your business is registered with an LTD, limited liability company, because that is the one that this Finace Act amendment covers. The amendment is under the Companies Income Tax Act, and only companies registered as LTDs or PLCs will benefit, from such. One other point, or maybe a few more. We've heard that minimum part of the changes that were brought under the Companies Income Tax is revision of the minimum tax rule. I believe it is the guardian of professional. You remember the old way of calculating minimum tax. There are 4 conditions, and you add excess of 500,000, right? So there's 0.5% of gross profit, right? 0.5% of net asset, 0.25% of paid up share capital, and 0.25%, that's 0.25, of 500,000. You determine which is the highest of the 4, and you add on top of that 0.125% of the excess. Is that right? You guys are too hot. Now, the argument around that is that why punish a business that is loss-making and asking the business to calculate tax based on net assets or paid up capital or any of those parameters? Ultimately, this company is paying taxes out of its capital, and at the end of the day, you are practically running it out of business. Now, the rule has been changed, but can I whisper something into your ears? The rules was simplified, but it's higher taxes. So when anybody tells you minimum tax has been removed, please categorize that as part of those that are meant to inflict a little bit of pain, because we have removed, or the law has removed, gross profit, net asset, paid up capital as part of the metrics. It's now very simple, very straightforward. Just 0.5% of your turnover. So it's simple. No, you don't even need to pay consultants. However, it is more than 4 times of what it used to be. because before it was 0.125. All right, so multiply that by 4, then you understand what has happened. So it's not something to so smile about that much. And for those who may be having the impression of, I need to multiply the number of entities so that I can come under the threshold of 25 million. Can I whisper something to your ears as well? Please watch it before you do that. Because the natural tendency is for people to assume that now that businesses with 25 million naira turnover or less are exempted from CIT, let me see whether by sharing out my business into different legal entities' name, maybe I'll be able to reduce my taxes. Perhaps you may be right, but remember that there are filing obligations. If FRS does what it's supposed to do, as I believe they are planning to, there are a lot of anti-avoidance provisions that the Revenue Authority should be able to do. There's a lot of data mining and intelligence that they're supposed to extract from behind to be able to see what is the ownership structure, who owns this, and why this is being done. Well, strictly speaking, you may not have, and this is debatable, strictly speaking, you may not have committed, any vividly identifiable criminal offense by having your entities multiplied into that, but that can trigger a chain, that can trigger an audit, a whole lot of things can happen. So just be careful. Plus the fact that you are still supposed to file returns, you're still supposed to paste, anyway, this is an accountant, so you just get your friend to do the auditing for you, right? But a lot of things still needs to happen in that area. But just a few more of the things, changes that were brought in. On the VAT side, prior to now, we account for VAT on an accrual basis, meaning that when you issue VAT invoice, it doesn't matter whether your customer had paid you or not. You're supposed to, remit, practically go borrow, to pay your VAT if your customer hasn't paid. But now the law has been changed. I'm sure you know that. So it's now strictly on cash basis. So a whole lot of things. So my recommendation again will be, don't listen to hearsay. You can only imagine the amount of technical sessions and debate and conversations that has happened to see different scenarios for many of these things. So if I give you, for example, the changes to commencement rule alone, over the last 2 to 3 weeks, I've had close to maybe 20 different scenarios, resulting in gaps, resulting in overlap. Could this be the intentment of the law because it means 1 year will be missing, or we're not? I mean, some companies will now be on actual year basis, some will be on PYB, based on the scenario that the thing is throwing up. So don't assume that, all that you have heard in few minutes with people sharing will be sufficient for you to get a grasp of it. Please familiarize yourself with it, particularly if you are practicing, right? And whether you are practicing as a consultant or you are practicing in-house as head of finance, don't just assume these things are simple. And for the first year, as we transit, it's proper that sessions like this, you attend as much as possible, read as much as possible, and if you like, if you can, engage professionals who can help you through that process. One of the things I've seen with Nigerians is this idea of, I can do it by myself. That's why we get into problems. The people who think they can't get it done alone by themselves maximize the benefit a whole lot more. That's why the multinationals and the big will continue to, we look at some companies reporting so much, and then their effective tax rate is as next to nothing, because they are leveraging competencies, they are leveraging advice, and all of that. Do that, get yourself equipped, and as we warm up to another finance bill being introduced, because we've been told by the president that this will not be an annual exercise, let's engage a little more than we have done. This one, I'm not sure that there is enough of our input from the outside. And when I say I'm talking of the general. I think what the government did a lot is to ensure that, the top, consulting firms are engaged. There is a committee that Professor Biola Sonny is involved in. Their input, the National Tax Policy Implementation Committee, had a great input into that, and they only amended it a little. we should ensure, particularly as an institute, all right, we should ensure that we articulate well ahead of time changes and input that we want to see into the process and pass it on as quickly as possible, so that maybe, just maybe, if we can't do a one sweep change of our laws, this bit by bit approach can at least get us closer to what we want to have. Like I said, I would ask that the slide be circulated, because I wouldn't have time to go through it. Thank you so very much.
Please jam it one again for Yomi. He has done justice to that. Let me remind us once again that this program is being aired. We are streaming live on YouTube, 171 TV. That is ONE7 ONE TV. And you can log on to the website joinmiteinternational.com/live-stream. Also, the organizer has promised that all this paper presentation will be shared on our email address, provided we register, and it will be hosted on their website. As my president will say, if you want to clap, clap. Your permission, sir. Professional colleagues, please, let's put our hands together as we welcome to the podium the Group Head Tax Dangote Group, Dr. Titilayo Editor, for welcome. FCA, FCTI.
Good afternoon. I was just saying that, is there anything for me to say? Permit me to stand on existing protocol. I've heard from my senior legal colleague that I used to call him. I've heard from professionals, and I'm saying, what more can I say? If I look at the history of Finace Act, if my memory is good, I think the last one was in 1999. And that is, for me to stand before you, and JMI is talking about Finace Act 2019, 30 years after the last one, and when they are doing 30 years, means there's a coincidence. So, I would not go so much into what has been discussed, because we've heard it again and again. But we can't know everything until when you read through and understand. The taste of the pudding is in. So when you read it, you have more of it. But we're talking about the ease of doing business, and I have to say, where do we start from? Has the Finace Act really given us that ease of doing business? And one of the things I looked at is, what is really this thing about ease of doing business? And that is when you're talking about Nigeria's ranking in order of how easy is it to run your business in the environment, starting from as you start the business, to dealing with your permit, with your registration, going into things like infrastructure, electricity, in things like protection of the investors. These are things that are looked at when you talk about ease of doing business. And then you talk about distance to frontiers, entrepreneurship, good practices, transparency. So if we're looking at it from that angle, and we're looking at the Finace Act, I can say that some of the things that are in the Finace Act have addressed some of the issues that ease of doing business is all about. And that is where we look at the categorization of the businesses into the small, medium, and large. The categorization is not 100% what anybody will say will be totally you are out of the tax net for the small businesses. There are critical areas that we still need to look into. And I'm happy that the FRA is working on the regulations, but the earlier the better, because there's so much confusion already. Now, one of the things that caught my attention in the Finace Act is the introduction of the securities lending transactions into the whole matter. And I start asking myself a question. Why would we go into that? But I have to say, what is even securities lending? It's a temporary transfer of securities, shares or bond from a lender to a borrower. The borrower provides collateral in return for loan. So it's more like a lending thing. And what the Act has done is to encourage the source of finance from you going to the bank to have it. You have your shares, you have your bond, you can get it to get what you want. And this is a way of easing your doing of business, because from the credit angle, you can have access. If you have good shares, at least if you have shares worth billions, you know what it can do for you if you want to exchange that for a loan. So these are things that I think is a good development in this. But like it's been said, we should not look at it on the face. Let's go deep into what is inside so we can know whether we're achieving that. Now, the other aspect on the company's income tax amendment is the profit exemption. There's always a misconception that when profit is exempted, the entity is exempted. It's a misconception. So you may have profit exempted, but you as an entity or a company, you are not exempted. So there are a lot of misconception about that. But what is coming out of the bill is that the fact that you are exempted does not remove the obligation for you to deduct withholding tax. So a lot of people say, because I'm exempted, I would just pay. If you are exempted, you have obligation to, you do not deduct, you have penalty that will come and wait for you. So this is clear, and we need to know that, because this is very clear now in the amendment to the Act. Now there's the issue about agricultural production business, 5 years incentive. I struggle with the intention of having the Finace Act help government generate revenue, and the fact that we are having incentives in the same act. So it's like you are giving with one hand, you are taking with the other hand, and I know the FRS will have to fight back on some of these things as time goes on, but I just need to open our eyes to some of the things going on. Now we have issues about deductibility. Just have your expenses and everybody will say it is when. But the Finace Act have tried to make it clear that for you to get that deduction, it must be exclusively related to the profit. So these are minor things that we don't look at when we are reading the law. We just look at it and browse through it. So that is being well pronounced. The exclusivity clause is there, well pronounced. Now, the issue of commencement, cessation, I think Yomi mentioned that. We're struggling with that now. Transition, there's gap. There's overlap. No, it's 2020, it's 2019, and that will continue until when there's clarity around it. So we have to just keep ourselves abreast. I won't go through everything, but I'll just keep the few points that I think I want to just put one or two voice to it. Now there's the introduction of 7th schedule. Our normal CIT Act, before the amendment, has 6 schedules. And the 7th schedule was introduced basically to define what will be the basis of deduction of your expenses. So you can't just say, because I've incurred these expenses for my business, I'm going to deduct it. No. You must go through the conditions that have been stated there. And it has also introduced, as earlier said,